Hello everybody, my name is Bruce, Numbers Guru, uncut, unfiltered, and another topic for today. When you work with me and when we do the course, I go on about how easy it is to get the right information in less than 4 minutes, and yes, I will be doing a video on that. But what is information, and what information do you need, and where do you get it from? So information is data that you've input in a useful format. So data itself is not actually that useful, but it does create the foundation for everything to go from there. So without data, you don't have information. The information that you need is all relevant to your business and what your current needs are. There are a few generic ones, generic reports that you can get. Often what is sent to you by accountants, or what you have to send to banks or institutions or wherever you want to, management accounts or whatever you want to call them. So those generic ones are the income statement and the balance sheet. Income statements are very, very useful, can be used often. Balance sheets are, for most businesses, not overly that useful month to month to make big decisions month to month, but overall and for financing and big capital purchases, they are very important. All this information is based on the data that you go in. If you put in rubbish data, you get rubbish information, and you get very bad foundation for any reporting or any decision. Now, what reports do I recommend that you use? The income statement for sure. There's absolutely no doubt, but not the income statement for the whole period of like this year, or some people use a quarter, which is fine, but I prefer just months. And as the year goes on, you add the months in columns, and this helps you identify trends. Perhaps your incomes are going up, perhaps your income's coming down, perhaps a sudden increase in computer expenses or advertising or whatever. And those trends are what you need to know. Those trends can be warning signs, or those trends are very known to you. Like, say for instance, you do a massive social media campaign over winter for, I don't know, if you make jerseys or something, I don't know, silly example, but you do an advertising campaign, your advertising expense will spike in June, say. But then it'll come back down to normal in June, July, maybe you put it out, and then August, September, October, it'll go back to normal. So you will know if there's a trend or if there's a spike like that. If there's a rising trend, then maybe, it's sort of slipped under your radar, but you can judge those trends as you go through the year. Also, month to month income statements can also reveal a cycle in your business. For instance, it's a classic example of a retail business. It's very flat during the year, and then November, December, January, very high volumes. So it's a plateau through the year, sort of up and down, and then suddenly it goes up, and then it comes down January, February. We all know that no one really wants to spend in January and February. However, if you're a school supplier, January, February is huge. It depends on what your business is. For a service business, with retainer clients like accountants, is not a huge cycle. Maybe with accountants during tax season, so June, July, August, September, in South Africa at least, there'll be a spike, but nothing huge. and again, it's a cycle. The other very, very important report that I would recommend is to have a customer aging analysis or customer days outstanding, depending on what accounting system you use. It's the same thing, and basically it shows you how much you owe and by who. It breaks it down into columns as to the current month, last month, 30 days, 60 days, 100 days, and it really is a reflection of how much is owed over what period. You know, if it's 30 days, okay, you start flirting with terms and conditions, and then 60 days you have to start, okay, this is now trouble coming. 90 days, 120 days, that's when you either start being forceful with your collections, or you start thinking, okay, well, maybe it's not being paid, so maybe we have to write them off as bad debts. So either you hand them over to lawyers or debt collections, whatever, or you start writing them off, depending on what your terms and conditions and everything is about. So those are the two biggest reports that you should be using. Again, it does not take long to get this information through your accounting system, and it certainly is something that you really need to keep an eye on. Certainly the money coming in, no money coming in, you won't survive. So again, train people to be able to retrieve this information very quickly. Less than 4 minutes is the aim. So yeah, so that's it for today. You know, if you want to get hold of me, all the links in the description below. Please like and subscribe. That's the mandatory request that everyone seems to do on YouTube videos. I really appreciate it. And until next time, cheers.